Good evening. I'm John Brown, and tonight we begin with sharp tremors across the global economy as the U.S.-China trade war escalates once again, triggering market chaos and shaking consumer confidence to its lowest level in more than 7 decades. In a bold move, China has announced sweeping tariff hikes on all U.S. goods, raising rates from 84% to a staggering 125%, effective April 12th. The decision comes as a direct response to President Trump's hike of U.S. duties on Chinese imports to 145% earlier this week. The tit-for-tat tariffs are sending shockwaves through both markets and households. U.S. consumer sentiment has now plunged to levels not seen since 1952, according to recent data, as uncertainty clouds the economic outlook. In the corporate world, the pressure is mounting. Tesla has reportedly stopped taking orders for its Model S and Model X in China, according to a report by MKT News. These models, imported directly into China, are now facing severe cost challenges under the new tariff regime. Tesla has not issued a formal statement yet, but sources indicate the decision may signal broader concerns about profitability and demand under rising trade restrictions. Meanwhile, Wall Street felt the tremors too. All 3 major stock indexes plummeted on Thursday. The S&P 500 dropped 3.5%, the Dow Jones fell 2.5%, and the Nasdaq slid a heavy 4.3%, erasing most of the previous day's gains. Investors are growing increasingly uneasy about the long-term impact of tariff-driven inflation and weakening global demand. Although the United States has temporarily paused a 26% tariff on India through July, major tariffs on goods from China, Mexico, and Canada remain firmly in place. These nations account for a significant portion of U.S. imports, and the prolonged tension is now weighing on both consumer behavior and business investment. According to reports by CNN, Federal Reserve officials are concerned. They warn that rising costs and shrinking confidence may lead to slower economic growth and complicate the Fed's path forward on interest rates and monetary policy. White House Press Secretary Caroline Leavitt defended the administration's stance earlier today, saying the tariffs are part of a broader strategy to put America first and reduce dependence on foreign goods. She added, quote, "America cannot exist if we continue to enrich and embolden China," and expressed optimism about the nation's economic trajectory, urging U.S. companies to prioritize domestic manufacturing. As tensions rise and markets react, one thing is clear. This trade war is far from over, and the road ahead remains uncertain for investors, consumers, and policymakers alike. I'm John Brown. Stay with us for continuing coverage on this developing story.